Going into our afternoon and coming out of the daily doldrums. We're starting off here looking at the DXY chart, and you can see here the traditional longs that we had here coming out of the 11th. We had pullbacks last week, Monday, that led us into and now through some profit targets here to these daily longs, which creates an environment where we are going straight up in extensions. The straight up in extensions, let me give you some context and zoom out here. The monthly charts, what you'll notice is that there's a dollar strength trade about every 3 years. And many people look at this as being a credit cycle. Some people refer to this, as correlating with the business cycle. We find it fascinating because of how closely it is related to the crypto spring, summer, fall, and then the dollar strength part of this, the crypto winter, which is what you see in and around these white ovals here. And if you look at the last real big dollar strength trade that we were inside of in 2021 going into 2022, it was this attempt at a double bottom that we came out of and ripped into a profit target in then late October of 2022. And that was the last real significant dollar strength trend that we had. And, conveniently, that was right at the beginning of the crypto winter. The cryptos have this tendency of being much more sensitive to dollar strength and weakness, right? And weakness than a lot of the rest of the market has. And, that's why this double bottom has been so important to pay attention to, because, we're right in this time frame right now of there's a cyclical pattern around that dollar strength trade. There's also this long and variable lag that we have in and around the Federal Reserve cutting interest rates, where we had an 11.07% rally if you study the last 15 Fed pivots all the way back into the 1940s. We have on average an 11.07% rally on the indices and then a 22% decline. In 2025, that actually ended up working out incredibly well because we had a 10% rally and a 20% decline. And we are right in that window again. So there's a lot of correlating cycles that are just happen to be in and around the same time that we have this dollar strength trade. Now, you could make a case of, well, those are narratives, but we have proof and price. And so narratives are true. All of them exist simultaneously, all at the same time. But when we have price in the direction of some of these cycles, we have to start paying attention. And right now, the dollar is going straight up in extensions. So we're watching for the next leg of that dollar strength trade. We had one here as we were coming out of our overnight time frame, this extension long level, and what happened to the indices? They absolutely puked. And, we're down almost 200 points on the week, and it's only a Tuesday morning at 10 o'clock. And so as we were going into our morning, we had room for the dollar to pull back into support again. And so what does that do? It creates a rally, a tailwind for the indices. And yet we are not yet at a new extension long level on the dollar or extension short level inversely on the euro. And so when we're looking at this DXY chart in the euro, you could make a case that there's still room for the indices to squeeze higher into resistance, at least from the dollar's perspective. Let's look at the bank chart. Bank, we had our gap down situation. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.